Welcome back to Investing Talk podcast. Today, we're tackling a question many of you are asking about a specific company. We're going to examine the question, is Amrize AG a good time to buy now? We've gathered some comprehensive sources to help us unpack everything you need to know about Amrize AG, from its financial health to what analysts are saying and, what the future might hold. Our mission, as always, is to distill the most important nuggets of knowledge, helping you get well-informed quickly and clearly.
That's right. We'll be looking at the fundamentals, valuation metrics, technical indicators, and even the latest news and potential catalysts that could impact the stock. It's about connecting the dots to give you a holistic view.
Before we jump into the details, if you find this kind of detailed analysis helpful, please remember to subscribe, like, and leave a comment. Your support helps us bring more of these conversations to you. And if you'd like us to look into a specific company for a future discussion, just leave a comment below after this discussion. Your input helps us decide what to explore next. Okay, let's unpack this company. Amrize operates in the construction materials sector, and we have some interesting figures on their fundamental health. What stands out to you regarding their revenue and profitability?
What's fascinating here is their trailing 12-month revenue of about $11.6 billion. That's a pretty big number. Coupled with a net profit margin of roughly 10.6% and a gross margin near 26%, it suggests, well, solid operational efficiency for their industry. These are reasonable profitability indicators, definitely.
That sounds promising, but what about their debt levels, especially in a capital-intensive industry like construction materials? That can be a worry.
Yeah, this raises an important question about their balance sheet. Amrize has a debt-to-equity ratio of approximately 0.887, or 88.7%. While moderate, it's definitely something to monitor. If we connect this to the bigger picture, it means they are leveraging debt, which isn't uncommon, but requires careful attention, like you said.
And on the earnings front, are they growing? What do the projections suggest?
Well, specific cash flow details weren't right in front of us in these sources, but the positive earnings per share of around $2.17 is a good sign. Even more tellingly, their forward PE is lower than their trailing PE, 18.1 versus 23.25.
Okay, so what does that mean exactly?
It implies that the market and analysts are expecting earnings improvement.
Wow.
A lower forward number suggests higher expected earnings in the future.
They certainly seem to. With a $27.3 billion market cap, Amrize ranks in the 90th percentile within the construction materials sector.
Wow, 90th percentile. That's
Wow.
high. It is. It reflects a very strong market position. They focus on building materials in North America and became an independent entity from Holcim AG back in June 2025.
Right, the spin-off.
Exactly. This independence signals an autonomous growth trajectory in a vital market. It lets them really focus.
So fundamentally strong. But let's talk about the price tag. How does Amrize's valuation stack up against its peers? We're looking at PE, PB, and PS ratios here.
This is where it gets really interesting. Amrize is trading at a premium across the board.
A premium? How much?
Well, its PE ratio is around 22.9 to 23.25 times earnings, significantly higher than the industry average of about 9.9 times.
It's more than double the average.
That's roughly 2.1 times the industry average, yeah. Similarly, its price to book is 2.9 times versus an industry average of 0.8 times, and price to sales is 2.4 times compared to 0.7 times. Big differences.
That's a considerable premium. What does that tell us? Is it just overhyped?
Well, this elevated valuation suggests investor optimism. The market clearly expects superior sales growth, asset quality, and future growth prospects, likely fueled by its recent spinoff and that strong market position we just talked about.
So does this premium mean it's overvalued, or is there room to grow still? What are analysts thinking?
A consensus 12-month price target of $58.50, offering roughly 16% upside from its current level of about $50.48, suggests it's perhaps fairly valued with potential for growth. It indicates that the market, or at least the analysts covering it, view this premium as justified given its outlook.
Okay, beyond the numbers, what does the stock's recent price action tell us? How has it been trading?
The stock recently closed at about $50.48, with its 52-week range being between $48.01 and $56.29. This moderately narrow trading band implies sort of a steady interest in the stock without wild fluctuations. More stability, perhaps.
And in terms of key levels, what should we be watching for support and resistance? Where might it bounce or stall?
The lower end of its 52-week range, near 48 days, could act as a strong support level. That's where buyers have stepped in before. Resistance is likely to be encountered around $56 to $58.
Which aligns with those analyst targets you mentioned.
Exactly. It aligns quite well, suggesting a potential area where it might consolidate or need some momentum to break through.
Does the daily volatility give us any clues? Is it a jumpy stock?
Its minimal daily volatility, around 1% daily moves usually, suggests a moderate level of stability in its price, not too jumpy day to day. Overall, the stock appears to be in a steady to mildly bullish trend, supported by analyst upgrades and positive price momentum in recent months.
Okay, moving beyond the hard numbers and charts, what's been happening with Amrize lately? Any significant company events or news that could be shaping its future?
Yes, a very significant event occurred in June 2025. Amrize officially became an independent entity from Holcim.
Right, the spin-off again. That seems crucial.
Yeah. It really is. This structural event could unlock operational focus and provide much clearer investor insight into the company's standalone performance,
Yeah,
without being tied to the larger parent company.
that's a big deal. What about how analysts are feeling about it now? Has sentiment shifted?
The consensus among I think it was 6 to 8 analysts covering it, is a buy rating. And that average target is still hovering around $58.50, suggesting that 16% upside potential we talked about. So analysts seem positive post-spinoff.
And are we seeing any unusual activity from insiders or maybe a lot of chatter on social media? Sometimes that signals something.
No significant insider trading or unusual social media buzz was noted in the sources we looked at, which often indicates the absence of unusual speculative activity. It suggests maybe a more fundamental-driven interest in the stock rather than hype.
Okay. Looking ahead then, what are some of the potential catalysts that could move the needle for Amrize? What should investors be watching for?
Well, the next earnings release, expected on September 2, 2025, will be a key event that's coming up fairly soon. This will provide critical clarity on recent performance and, importantly, future guidance now that they're independent. Being newly independent could also lead to new strategic initiatives, maybe product launches, operational efficiencies, or even M&A, though none have been explicitly highlighted yet. Just possibilities.
And what about broader macroeconomic factors? How sensitive are they?
Construction materials demand and infrastructure spending trends in North America will be key macro catalysts. Huge factors for them. The company's reliance on this specific market makes these trends particularly important. A boost in construction or infrastructure spending would be a big plus.
So what are the potential downsides or risks that investors should be aware of with Amrize? The flip side of the coin.
There are a few. Stock-specific risks include their moderate debt level, which we mentioned earlier, and their dependence on the North American construction market. That exposes them to cyclicality and interest rate risks, if the economy slows or rates go up. The construction materials industry itself is also sensitive to things like commodity price fluctuations, regulatory changes, and just broader economic cycles. Standard industry risks, but still important.
What about its status as a recent spin-off? Does that carry unique risks itself? Starting fresh, essentially.
Yeah, that raises an important question. As a relatively recent spinoff incorporated in 2023 and independent from Holcim in 2025, there are operational risks involved.
Yeah.
Risks in establishing a distinct market identity and effectively managing that whole transition. It's not always smooth.
Right.
While volatility is moderate and liquidity seems adequate with over 3 million shares traded daily, these transition factors are definitely something to consider.
Okay, so putting it all together, what does this all mean for Amrize AG? If we had to give it a rating, an entry point, suitability advice, what would that look like?
Based on our examination of the sources, Amrize earns a solid rating of, let's say, 7.5 out of 10. This reflects solid fundamentals, that premium valuation that seems justified by its growth prospects and industry leadership, and only moderate risk due to sector cyclicality and its spin-off transition. So pretty good, but not without things to watch.
And for those considering an investment, what's a good entry price range where it might be a decent spot to get in?
The best entry price range appears to be around $48 to $50.
Okay. Near current levels, and that's support.
Exactly. It's near its recent support and current price. This offers potentially a reasonable risk-reward profile.
Who is this stock most suitable for? Long-term investors, short-term traders, or maybe both?
It's actually quite versatile. Amrize is probably more appropriate for long-term investors who can tolerate the sector's cyclicality and aim to capitalize on its growth as a standalone entity matures. That independent story playing out. However, it's also suitable for short-term traders seeking to capture maybe pre-earnings momentum or other catalyst-driven moves.
Like carefully, right?
Absolutely, provided they employ disciplined stop-loss measures. Risk management is key there.
And speaking of stop-loss, any suggestions there for the traders?
For trading, consider a stop-loss around 5% below your entry, roughly $45.50 maybe, to protect against significant downside. For take-profit guidance, Aiming near those analyst targets of $58 to $60 could offer about 15–18% capital gain potential in the near term if things go well.
So to bring it all home, Amrize presents as a fundamentally sound company with a strong industry position and real growth potential post-spinoff. It's trading at a premium, yes, but that premium appears to reflect a justified optimism about its focus and market strength.
Absolutely. For investors comfortable with the nuances of sector cyclicality and those spin-off risks, it certainly appears to be a good candidate for long-term investment consideration. And for those with a shorter-term horizon, there are opportunities around its upcoming earnings and other catalysts, managed carefully, of course.
What stands out to you from this discussion, and how might Amrize's newly independent status redefine its role in the construction materials landscape moving forward? Something for you to ponder as you continue your own research. That's all for this discussion on Amrize. We hope this look has given you valuable insights. Until next time, keep learning and stay well informed.